And we are live.
Awesome.
Welcome back, John. How was
Hey,
your
thanks, Craig. How you doing, man?
good? I love your shirt.
Yeah, isn't that something? Just, a couple of guys thinking alike. This is getting a little weird now. I think our wives are going to wonder what's going on.
Yeah, and we're what, 1,500 miles away?
Yeah, exactly. Isn't that hilarious? I thought I'd get dressed up for the show and get rid of my t-shirt look.
Yeah, I had to get dressed up for an open house today.
You did the same thing, exactly. Yeah, I was cracking up about that when you called me and you said you're actually doing an open house. I'm like, what are you doing? What is going on?
Oh, it's been a long time since I've done one.
Yeah,
and I don't miss them.
Yeah, but you had some people coming through.
Yeah, we had 4 groups through. Just did it for an hour. New listing.
Anyone represented, or were they all unrepresented? They all just come in without agents. They say they had agents.
2 were neighbors, and then 2 were just kind of solo looking.
Okay.
And it's like, okay, I could have probably worked a little harder to get them as clients, but do I really want that right now?
Right.
I mean, it's challenging. You take on a client, I mean, it's a lot of work.
Yeah.
And then you start looking at, oh, I'm going to get beat up for, commission now too.
Yeah.
Do I want to take that on?
Right.
It's one thing if you're working with your, sphere, your friends and family. It's another thing if you're working with total strangers and you don't know what you're getting into.
Right. Absolutely. So this week we had the feds, right? The feds finally stepped up to the plate and kind of, I think, surprised a lot of people, although the market was projecting.
Did I call it or what?
You did. You totally called it. Right? We both called it, right? So you called it 50. I said 25 because I said the feds didn't have the guts to go 50. The market the day before said it was a 66% probability that they were going to go 50. All the talking heads said, no, 25, et cetera, et cetera. They're going to scare the market if they go 50. They're going to say, what's going on? What does the Fed know that we don't know? And
of course, you called the mortgage rate.
What's that?
You called the mortgage rates.
Yeah, and then I said the mortgage rates would go up after the Fed raises rates, whatever they raise them. And sure enough, that was kind of the talk for a couple of days. Oh, interest rates went up. Not a big deal. Interest rates went up, what, a tick, a couple of ticks? I mean, it was minor.
They still went up. After a 50, basis point cut, you think they'd
still
go down.
Went up. Yep. Yeah, still went up. And that just tells me that the market anticipates this anyway. Mm-hmm. So the market was kind of, I think, telling the Fed what you got to do, and I still think the Fed's too high. I think the Fed's got to come another 50. I think in November, and then maybe back it off to quarters after that. Their biggest concern now is not so much inflation because they think it's down. Although I talked to my wife, I'm not a big grocery shopper. I like to go once in a while, but she does most of that. I'll ask her every time, hey, how are prices at the grocery store? She's like, they're not going down. They're not going down.
But they're not going up as fast.
But they're not going up as fast, right? So you should feel great about that. Thank you very much. Can I have another, please?
Yes.
But we've had this issue. We love eggs. So eggs are now like $4 a carton down here somewhere. I don't know if something happened in the Southeast. They had some, disaster happen. So eggs went through the roof. When we first moved here to Greenville, eggs were so much cheaper than they were even in Minnesota. I think it was like 75 cents a dozen. It was crazy. Minnesota was like $2 a dozen.
$3 I got my own chickens now.
What's that?
I got my own chickens now.
You got your own chickens now. There you go.
Yep. So I get free eggs. Well, not free. I gotta
feed
the chickens.
Yep. Yeah, it's probably a neutral transaction there, I think. But they're your eggs, and you know what you're feeding them, right?
Yep.
So you're not giving them used diapers or anything, right?
No.
They're not feeding on that.
They'll eat just about anything, though.
Well, they will, right? You got tires or anything else like that you might throw at them. They might eat that stuff. Yeah. But anyway, so interest rates ticked up a little bit, not a big deal. But I think the important thing is the trend is down. And, I think there's speculation, certainly by next spring, interest rates are going to be, for mortgages anyway, probably under 5.5.
Okay. You don't think this is going to spur another runaway inflation train?
I don't know. The thing that's hard to tell is how much is that because of the interest rates versus things got so screwed up on supply chains through COVID that just spiked and screwed everything up. And it's kind of now coming back into normalcy. But I think companies still have problems with, employees and in hiring and all that stuff for that kind of work anyway. White collar work's a whole other story.
Okay. I think the numbers are pretty bad if they cut 50 basis points. So I don't know how bad the economy is underneath. I mean, we looked at some of the stats on the commercial, the banks, and then the commercial real estate. So things might be pretty ugly behind the scenes. What's your sense on that?
Well, I think their biggest issue is they want to not see a spike in unemployment, right? So they want to try to save from companies having to lay off lots of people, which often will happen, by the way. They're all doing their budgets right now for 2025, right?
Mm-hmm.
They're all figuring out who are they keeping, who are they letting go. And so I would expect layoffs will continue. Maybe we get through the holidays, depending on how desperate some of these companies are. But at least people have their Christmas holiday before they give them the notice on January 2nd. But I suspect there'll be a fair amount more layoffs coming early in January. And I think the Fed's just trying to stop that or slow that down so it doesn't go crazy, right? It kind of starts building on itself. Hey, this company's laying off, this company's laying off, this company's laying off. Everyone's like, well, we should pull back. We should scale back. I think they're trying to save that.
Okay. So with low rates and there's not job security out there, that doesn't necessarily spur on another wave of home buying.
I would think that you'd want to think twice, right, before signing up for, what's an average home in the Twin Cities, $550,000 now or some absurd number.
Yeah, the median's like 380. So yeah, the West Metro, you're probably fives.
Right. For a split level.
Yep.
3.2. Wayzata Schools.
That's what I was in today. 480 for a 4-bedroom split level Wayzata Schools.
2,200 square feet, maybe.
Yep, 21.
500 grand.
Yes.
Wow.
I remember those were 250, and I thought they were too much.
They were 250. Yep. Yeah. That's incredible. Absolutely incredible. So I don't, I think that you would probably think twice a little bit, depending on the firm you're working for, if you're going to sign up for a new mortgage.
Okay.
So I don't know. I think the market's still a little bit of a standstill, right? There's the doomers that are out there. I mean, they're everywhere. I don't know if that's in your feed or not. I was responding to Darth somebody. I forget who that guy is.
Yeah, Mr. Doom himself.
I just he was kind of coming back at me, but I was like, man, it's just all doom and gloom. It's doom and gloom on LinkedIn. It's doom and gloom on YouTube, Twitter. But then you do still have those cheerleaders, right? There's the cheerleaders out there saying, hey, now interest rates are down. Market's going to take off again. Here we go. I'm not in that camp yet. I mean, maybe by spring we get there if rates come down another 0.5 point, which I think is completely probable.
Okay.
Right. So maybe we go from 6.5 down under 6, and I think on its way to 5.5 ultimately at some point in 2025 for your standard mortgage.
Okay. So then we look at Lance Lambert tweeted this out, and this is kind of the housing market is 1.5 million housing units below balance market. Okay. So even with low rates, I mean, we could spur another home price rapid appreciation or inflation.
We could, but one of the things that I was trying to wrap my head around on this, Craig, looking at it, was if you really brought 1.5 million to market, is that what he's saying, to get it in balance?
Yep.
But I think that's under the assumption, that's the whole, and I guess I have to think about this a little bit, right? 6 months inventory, they say, is a balanced inventory.
Correct.
But it seems to me that there's a lack of buyer demand. It just doesn't feel super strong to me. I don't know what you think or not, but and maybe it's a hesitation with the election coming up, and maybe things will change come January, February, March, after people know who's elected, hopefully, for president by then.
There's a lot of uncertainty out there, right?
There's a lot of uncertainty, so it feels a little light on the demand side. So just in terms of activity. But you know what? I remember that when I was active, I remember, you know, you and I would talk about, it feels like we're in this air pocket. Like literally, where did everybody go? Like, you know, people were buying houses in April, May, and June, and July 4th comes and vacations and school. And all of a sudden it's like, is anybody buying a house? You know, but that's just kind of the normal market.
Right. We're going into lower inventory, cyclical, going into the winter.
Yep.
And then spring market, it picks back up again. Start mid-January, right after the Super Bowl.
Yep.
Takes off again.
And you can't even stop it. It just goes up and down. It doesn't really matter. It's like waves coming in. It's like the tide coming in and tide going out.
Yep. Okay, so that mixed with the demand, I think we touched on this last time. Let's see if I can find it here. We are here. So this is the millennials, right? So the millennials are the cause of the expensive home prices. This is, they're turning 35 every day. So 13,000 of them in 2024.
Interesting. Yeah. 2025, 13.6.
Yep. The next 10 years is a massive amount of home buying age. This is a prime home buying age of the millennial generation.
Yeah. So here's the challenge though on that, right? If they've been used to renting some class A, you know, gorgeous multifamily apartment building with all these amenities and it's all beautiful and new, and they're spending $2,000 or $2,500 a month for that, what kind of house do they want to buy?
They're skipping their starter home, aren't they?
Are they buying that 4-bedroom, 2-bath Plymouth split? That unless it's been updated, I don't know. I mean, it'll be interesting to see what do these guys buy, because there's been so much nice apartments that have been pumped into the country that people have been living in. I just wonder how that affects. That would be kind of interesting. I'm not sure that anybody's really done a study on that. What kind of houses did these people end up buying when they moved out of those fancy apartment buildings?
That's a good question.
You know?
I know I picked up renters out of some of those nice apartment buildings.
I wonder.
They went into those townhomes that I have.
Okay. We should ping John Burns on that on LinkedIn. I know you're not super active on LinkedIn, but he is. Yeah. That might be an interesting analysis. Are they
you can reach out to them.
Are they biased to new homes?
I don't think they have the credit. It's a YOLO. You only live once.
Could be. Reminds me when we lived in San Francisco, housing prices were so expensive then, back in the when did we move out there? Late 80s, early 90s, and then into the early 2000s. Housing was just so expensive, people just put their money in the cars. Everybody had fancy cars because they couldn't afford a house.
Well, the car prices are crashing now.
Yeah, I wish I didn't buy one a year ago.
Well, when you got to replace one, you got to replace one.
Well, that's true. That's true. Yeah. So, but it's just a car.
Yeah. So the residential market's just chugging along. It's going to keep going no matter what. I am finding a lot of people online trying to figure out how to take advantage of the new broker commissions.
Yeah.
And there was one contorting himself into all different directions. How do I make the offer without getting a buyer's agent and without drafting a purchase agreement? And it's like that is the offer.
Right.
You write the purchase agreement. That's your offer. Everything else is just talk.
Yeah.
And he's like, well, I want to save, then maybe 1% on the commission. And I'm like, just write the offer,
Right.
The 1% is going to be $3,000 on what you're talking about.
Right.
It's just, I think people think that commission is so much more money, and it's not.
Right. Right. Yeah, that'll be interesting. I think people are still trying to figure that out. They don't know yet. So, and I think that's probably adding to a little bit of the sluggishness that's out there. So,
yeah. But back to your idea, I think they should. The business model will be like real estate teams that are just represent buyers. It'd be like a big, high-powered attorney brokerage going in, and we're just going to shred the seller. We're going to take advantage, right? Dewey, Cheatham, and Howe, real estate agents. And you're going to have one special agent that's just going to deal with the inspections and just, but that's not the way real estate transactions go together.
Right.
That's why attorneys don't do this, is because they just blow up deals. They fight over the stupidest things rather than trying to get everyone on the same page.
Yeah. Bill it by the hour. For sure.
So that commercial sector is going crazy. What are you seeing in your world?
Well, one of the things that I thought was interesting, if you want to pull up that Blackstone article, Bloomberg had it.
Do with that?
You got the Bloomberg. Check your chats there.
Oh, I jumped over a section.
So Blackstone just sold all of Motel 6 for $525 million, which sounds like a massive amount of money, and it is a lot of money. I don't know what they made on the deal. They sold it to an India-based company that owns a lot of hotels. It's 1,500 hotels though, so I was doing the math. That's 300 and what did I tell you? It was like 350,000. Yeah, $350,000 a building on average is what that was, which is kind of interesting. And one of the things that I've seen, and I don't know what this new company, what their plans are for that, but it sure seems like to me that's kind of a bargain price for that much real estate. Granted, it is Motel 6. Some of them are probably pretty deprived in terms of renovations that are needed, but some of them are decent. And some, I don't know if they'll sell some of those off or convert them to apartment buildings. I see lots of guys on Twitter anyway that are doing some of that kind of development where they're buying these kinds of old buildings like that and they're converting them to residential housing, apartments. Kind of an interesting deal. And that would be a great deal. If you could buy one of those for $350,000, I would think you could make some money on that.
But you have to buy $1 billion worth, right?
Yeah, $500 million anyway.
$500 million,
right? But there are other little buildings like that are out there, right? There's other little kind of rundown, cheapo hotels, motels that are out there.
So the wholesalers I had done business with, it's harder to find these deals out there.
Yeah.
So what they've been chasing are these old motels, the Ma and Pa motels off of the interstate. They got good, a nice hard corner, good exposure to the interstate, and they can buy them pretty cheap because the Ma and Pa investors are retiring and the kids don't want anything to do with that business.
Yep.
So they're trying to figure ways out to get that land paid for by getting these things up and running and rented out in different uses, because those are valuable corners as traffic picks up.
Yeah. Yeah, I mean, they possibly could just blade them and just sell them for more than what they bought it for, potentially, right? So, or just redevelop it or turn it into housing or whatever that they want to do. But you and I have talked about before about the challenges with, how do you make all this stuff affordable for people? Really, truly make it affordable for them, other than the quote unquote affordable housing, which of course is government gets in bed with investors to build housing so investors benefit from it. And they say that the consumer benefits from it. I don't know how much they benefit from it, but the investors definitely benefit from that. So, but to take like these Motel 6s or some of these other little cheap, motels, if you convert those to apartment buildings, and maybe they've got enough space, you could put an ancillary building or something there that might be I don't know, kind of a guest hall, meeting place, a little kitchenette, stuff maybe for parties or social gatherings, laundry, all that stuff. You could probably make it kind of interesting, right? Areas for pools. It's an interesting concept. It just comes down to what's going to cost to renovate that thing, and what can you get for rents. So who knows?
I don't know if this is going to do anything here. I just did a quick search. So like Motel 6, like, I don't know what this Amarillo. Well, maybe that might be an okay location. $48 a night. I don't know what that neighborhood's like.
Yeah.
I was just thinking, that might make good housing, but what kind of locations are they at? Yeah,
the challenge too, right? Those are mostly in pretty commercial areas. Right. So the councils may not want to put housing there.
Yep.
That's possible. But that gets back to, again, all the rules and the regulatory stuff that limits housing development. It's all a challenge.
Right. I mean, we've created our own housing problem with
Right.
regulations,
Right.
whether it's building codes, zoning codes.
Yeah.
I mean, it's on us. We voted
Yeah.
it in.
Yeah.
You know, we don't want ugly housing and not in my backyard. That's the reason we don't have anything nice.
Hey, I saw another interesting story. I didn't give it to you, but it was. Let me see if I can find this really quick. Malibu mobile home park sold, and it sold for $200 million. LA Times. I'm going to send this to you really quickly here, so you can see this thing. This is really quite extraordinary. So 200 million. So it's like 95 acres on the beach in Malibu. I mean, not all of it's on the beach, right? It's kind of, they've got beachfront and then it goes back from the beach. Multi-million-dollar mobile homes or homes that are in there or whatever. I don't get the whole thing, but it quietly just sold for 200 million. I think a Chicago-based company purchased that, and I don't know how this one's set up. From a cost segregation standpoint, I love mobile home parks, RV parks. Those do unbelievably well. I'm sure these guys in
That
Chicago
just blows my mind.
Super
But they're
savvy.
cash cows. Wow.
Super savvy. Big time cash cows. Yeah, big cash cows. We should be teaching our kids to grow up and own mobile home parks and RV parks. Seriously.
Everything I was taught has been wrong.
It's just unbelievable. They just kind of amazing, but yeah, I mean, things are going well. I think, commercial real estate slowed down, quite a bit, at least from the stuff I'm looking at. I think transaction activity is probably down 30%, but I live in a red state. I'm in South Carolina. It's still very normal here. Whereas you live in Minneapolis, the city that is
ground zero.
The city that is working very hard to become the new Detroit or Baltimore, or Gary, Indiana. It's Wild West shootouts all the time down there. What is going on?
We have a listener that just Gone South Outfitters. He just started an RV park. That's fantastic.
That's awesome. Make sure you do cost segregation. I can help you with that.
Yeah, John does cost segregation, so you can get a hold of John.
Yeah, that's good for him for buying an RV park. That's absolutely fantastic. It's just amazing. I just did one in Texas. This guy just built one in Texas. Awesome park. I think he spent, trying to remember the numbers on it now. I don't remember. It's like $1 million or something, I think. And the way the rules are in 2024, you can only accelerate 60% of the bonus depreciation, but I think it was probably close to 90% that was considered bonus depreciation. So $900,000 tax deduction, multiply that by 60%, so $540,000.
Okay.
So
back up a little bit.
Yeah.
Explain cost segregation to someone who's never heard of it.
So cost segregation, if you own a rental property, you depreciate that over 27 and a half years. Commercial properties, 39 years. So the government gives you a bit of a tax break, right? Tax deduction if you own those properties.
Okay, so let's just say you paid, what's a decent number? 500,000 for the park.
Yeah, well, and let's just try to use simple math. Let's say it's $1 million, right?
Okay.
So easy math, or maybe 1.1 million, and the land is 100,000, let's say. So you back the land out. Now you got $1 million. That's your roadways, all your utilities, your hookups, lighting, fencing. You might have an office building. You might have a pool for people, street signs, mailboxes, all that stuff. You have all that invested in this park. Those are the land improvements, and most of that will be identified as 5 or 15-year class life property. Most of that's 15-year. And right now, the way the tax laws are, you can take 60% of that in 2024. If you put it into service in 2024, you can take 60% of that. So if you had $1 million,
$1 million times 60%.
Yep. So it's $600,000 deduction. So you put a building into service first year, 1.1 million, and take a $500,000 or $600,000 deduction. Year one. So you wouldn't have made that much money. They print money, but they're not printing that much money. So you would end up creating a net loss carry forward. So that just means you probably wouldn't pay income taxes on that property for a few years.
Nice.
Could be 2, 3, 4 years, 5 years. Depends on how profitable you are.
Okay.
So, yeah.
So then when you cost segregate it, you speed that timeline up.
Speed it up. Yep. You're taking the depreciation earlier, right? We're not giving you any more depreciation. You're just taking it sooner. So you can put that money back to work. That's the whole idea behind it, in part why it's part of the law. Government says, look, you as an investor, you get a depreciation. You can save some money in your taxes with the hope you're going to reinvest it however you want to reinvest it. If you want to go buy a new car, boat, take a trip, you're reinvesting it. You want to go buy another house, you're reinvesting it. You're keeping money in the system rather than keeping it at the IRS. Government's just going to print it anyway.
Yeah. Okay, so this is, I think you pointed this out, the old Piper Jaffray building, the bottom right here.
Yeah.
So that thing just sold for, what was it, 91% off of the $73 million it sold for in 2019. It just sold for $6.5 million.
It's just amazing.
That's Minneapolis.
You can't even comprehend it.
Yep. Then this one, I think this was South Second.
Yep.
That one was 64% off.
So that one is from 20 million to 7.2 million. Wow.
And then I think this is LaSalle. This one, 70% off. I think that's LaSalle.
That's amazing. That is a massive building.
Yep. So I talked to a couple of commercial brokers I work with, and I was saying, are there any deals out there? And, I'm looking to invest. And he's like, it's only for the big players. You can't get financing on any of this stuff. You got to come in and you got to pay cash for these deals. So those big outfits are getting deals out there, but it's not the small guys able to leverage into these. So
right, like the Kickernick building, right? That's kind of a cool building. I don't know what the condition of that is. Pretty low price, great location.
This one here,
yeah,
yep.
Although I'm thinking, does the light rail kind of go right through there, right by there? That used to be
one block up. Isn't this the Sioux Line building here?
Yeah, it used to be a plus that you'd be by the light rail, but a cool building, but it probably needs a lot of work.
Yep.
And what bank is going to loan you if you say, well, yeah, we'll buy it for 3.8 million, but we got to put 8 million into it? What bank's going to loan? It might be more than 8 million.
Well, there's no cash flow on it, is why they're selling so cheap.
There's no cash flow. Yep.
So you need to have the deep pockets to hold it. The bank doesn't want to sit there and hold it for you.
Yep.
Because you got to hold it till the market turns around or repurpose it. So what do you repurpose these into? Housing is a challenge.
Right.
They did the one office building over in Minnetonka. You remember that, Cloud 9?
Yeah.
Yeah. Yep. And that was a challenge.
Yeah. Yeah.
So it can be done. It's expensive. You're at it was about twice the price of building new is what it ended up at, but it kind of had a great location, so it worked there.
Yeah.
Someone else said, you could turn some of these into storage units. So you have an indoor storage lockers built on these buildings, and generate some revenue that way. But
that's possible. Indoor pickleball courts, maybe.
Pickleball courts, the answer to everything.
Might work for a short term or something. I don't know. You turn it into a recreation center, bowling on one floor and table tennis on another and pickleball on another, badminton. I don't know. Who knows? Top level volleyball.
Yeah, I think it's all going to sort itself out, though. I think the going back to the office, I think that's part of it. I think the bad numbers on the banks. Where did we have that? What were the banks?
Yeah, banks are sitting on like $500 billion worth of losses or something.
Yeah. What is it? Unrealized losses, investment securities in U.S. banks reached 512 billion.
Yeah.
7 times higher than the peak of the 2008 financial crisis. I haven't wrapped my head around this one, so I can't speak to this one.
No, I can't either. And I don't know all the ramifications. I don't know how long they can extend and pretend on all this stuff. I think one of the things that you can say, I think, is different this time than 08, 09, those kinds of things. I think that these guys learned a lot. I remember we were kind of going through that, and there were some problems in the commercial space, but those guys were getting them renegotiated. They were starting to do some extend and pretend and getting that figured out. Some people lost their buildings. Obviously, these big giant ones, you're not going to get an extend and pretend on a $155 million building that's now worth $46 million. That's just not. They're just going to blow that up and write that off. But smaller stuff that might be going bad, right? My guess is these guys get a lot of this stuff figured out. How do they extend and pretend this and redo their deals?
Robert Kiyosaki had a great quote from the housing crash. He goes, if you borrow money and you can't repay it, you got a problem. If you borrow a lot of money from the bank and you can't repay it, the bank has a problem.
That's exactly right. That's exactly right. And they don't want the buildings, right? They do not want these. What bank wants a building that maybe they financed for 30 million and now it's worth 15, 16, 10. If you're in San Francisco, they've dropped dramatically. Well, clearly in Minneapolis too. It's right on the heels of San Francisco, it looks like.
Yeah. But what do you do with it? You can't cash flow it.
Well, and you're not going to do anything with it with the way they run those cities. Right. I mean,
that's what's going on with St. Paul. I've got a friend who just let a 15-story building go back. It used to be the Lifetime Fitness.
Okay.
And beautiful, beautiful 1920s architecture. It's indoor swimming pool up on like the 10th floor. It's just gorgeous. And he can't keep tenants there because there's so many homeless out in front of the building.
Yeah. Yeah, I was talking to another friend about St. Paul, asking about how's it doing, because Minneapolis tends to get all the news, but St. Paul is not doing well. I've heard
St. Paul's in worse shape.
Lot of tenants. They were always in worse shape anyway, right? Trying to get people back, and now it's just kind of a ghost town. I have an idea. I was just thinking about maybe what they do is just obliterate all that stuff and just turn it into giant power plants now, because we're going to need giant data centers and power plants. You've got the river there. I don't know if they can tap into that somehow for power, but maybe just wipe it all out. Maybe just take it all down. I mean, you got the Excel Center. That's a bummer. You got the Ordway. You got the St. Paul Hotel. Is there anything else left saving after that? I know you got the government buildings. Those aren't worth saving. State Capitol probably is worth saving. That's kind of special place.
As you're describing this, I'm picturing the scenes from the movie Idiocracy on what the cities look like in the future. Have you seen it?
No, I haven't. But
my God.
Do you have a little image you're able to share here?
Keep talking. I'll see if I can find one.
But one of the things that's going on with the whole AI thing, there's not enough power to do all this stuff. We're going to need more power, and it's going to need to be put somewhere. So if you have these cities that they're just basically turning into Mad Max, why not just level them anyway? Just turn them into gigantic data centers and power operations, and make a ton of money off of leasing the land back to them, do ground leases, and just level it, start over. We'll think back in the day, St. Paul used to be on the map. There you go. That's it before it gets rebuilt into gigantic data centers and new power plants. That is the model for St. Paul.
Yes.
They could power all of Minnesota. How about that?
Yeah, but, I just read someone down in the southeast, they're building a nuke plant, a couple of them, right?
Okay.
God, I forget the state. I'm like, God, that's where it's Tennessee. It was Tennessee's building a couple nuke plants. So they're going to have cheap, efficient electricity.
Yeah.
So they're going to draw in the manufacturing, the data centers. That's a place to be.
Yeah,
is if you can get into that market, because industry is going to follow the cheap electricity.
It's going to need it. It's going to be like oxygen. They're going to have it. And one of the things they're going to do is, I don't know if you happen to see, but 3 Mile Island is going to get fired up again. You remember 3 Mile Island from 30 some years ago where they had that leak and it's, and then that blew into everything.
Do you know what that was equivalent to?
No.
Like the potassium, the radiation off a couple bananas.
Oh, nice. And that led to all the media freaking out, all the scare shows, everything else. It killed the nuclear business in the United States effectively. But I find it ironic. I believe is it Microsoft? I think they're doing a deal with Microsoft. They're going to fire the thing back up because Microsoft needs a data center, and they're going to put it right by the 3 Mile Island and use the power from 3 Mile Island. I thought, well, isn't that ironic, right? They shut it down for all their scaredy cat nuclear stuff, and apparently it had been in some kind of operational. I didn't realize it was operating, and then I think in 2019 it then closed down. But now they're bringing it back for these data centers, and these data centers are just going to chew up energy like crazy. Absolutely like crazy. I mean, think about the processing power. When you and I jump into ChatGPT and ask it questions, it is going through a whole lot of searches to pull that information.
Do you want to run down that rabbit hole? We'll do that in a minute. Gone South Outfitters just updated us. His RV park is in Louisiana.
Yeah,
he built it for $125,000 for 15 spots.
Nice.
Bought the property across the street from the clubhouse. Is the small clubhouse, 25 acres with a river and stream. Built it all for $200,000. Not bad.
Nice. Awesome.
Working on building out some cabins. To be honest, demand isn't super high yet, but yeah, that takes a while. You don't build a business and everyone comes right away.
Right.
5 minutes from State Park. Perfect.
Nice.
And they mentioned some lithium plants coming in Arkansas. I'm not sure what a lithium plant does. Is that processing lithium?
I don't know. That's a good question. I don't know.
Or making the lithium batteries, I bet.
Could be. Could be. That's what
sense.
It is.
Okay.
Yeah. That could be. So good for that guy doing the RV park. He'll do well by building that out like that. Yeah. All these batteries. So I don't know. It's all going to be a crazy, interesting time for sure. So,
all right. Should we run down our rabbit hole that we spent an hour on before we started?
Yeah. What are you talking about? Is it the Airbnb stuff?
Yep. Airbnb stuff. Okay. So we talked about the housing shortage, right? We're, what was it 1.5 million homes short?
Yep.
Okay. So we just started exploring the Airbnbs, and this website, we started looking into this. This one's the Austin market. I'm not too familiar with Austin. But basically there's 4,734 out of 15,244 listings. 164 average nights.
Don't they?
I guess there's 15,000.
Go back go back a little bit on that. I think because they have 15,000 Airbnbs.
Yep. Can you read it? Top right.
Yeah. I'm just going to search something. Top right, I see that. Yeah, I think the way that you had it searched. I was going to look at this really fast. Get the data. Austin, Texas. Yeah, because I've got a search that shows 15,000. So you've narrowed yours down, and I don't know what you narrowed that down by. Maybe by the amount they were making.
I only did entire homes and apartments, and only recently booked. There we go.
Got it. So
I narrowed it down.
So they have 15,000, which we were going through a bunch of these cities. You know, the Twin Cities. What did you say it had, like 4,200 or something?
Yeah, 4,800 maybe.
Of Austin. So population of Austin, Texas is 983,000. And there's 15,000 Airbnbs. And you have, what do we have? The Twin Cities? Does it just say Twin Cities? Is that what it is? Twin Cities MSA.
Okay, so this is the Twin Cities.
This is extraordinary. This is extraordinary. So Twin Cities MSA, that is a large area. Twin Cities MSA population.
But this one goes all the way up to Mille Lacs. So that's bigger than our 16 county or 13 county area.
Okay, so I just did Twin Cities MSA population. I'm using Microsoft Bing. It says 4 million, just under 4.1 million in the Twin Cities MSA, and they have what, 4,200 Airbnbs?
4,800.
4,800 Airbnbs. Austin, Texas, 983,000 is 15,000 Airbnbs.
Okay, so we have 1.5 million households. I was looking for housing units. Here we go. 1,553,000 housing units.
And that's considered what? The Twin Cities?
Yeah, this isn't as big an area. This one is Minneapolis St. Paul Metro.
That's
so
pretty close.
Is,
that's
close.
it. That's it. That's the MSA. Yep. So they're saying 3.6 million. My search said 4 million.
Yeah, this is the CSA ACS 2022.
Okay. I mean, you didn't grow by 400,000 or 500,000 in 2 years, but anyway, it's 3.5 to 4 million roughly. It's a big area. So you have 1%, basically 1% of your 4,800 divided by 4 million divided by 4,800. What is that? That's not even 1%.
That's 4,800 divided by 1,550,000, right?
It's tiny. So a tiny percentage of property.
Yeah, you're 0.3%.
Right, it's tiny
of the housing stock.
Austin has a lot more. So what's interesting is, so we think about it. Austin, I think their home prices are down maybe 17% year over year, something like that, or maybe from the peak they've fallen quite a bit. It's no longer, it's lost the glamour a little bit. Obviously, it's still getting people from California moving there, but I think that's scaled back quite a bit. And now you have all these Airbnbs, and if Airbnbs start failing a bit, some of these will start coming on the market, I would expect. Right? That's a lot of Airbnbs.
It is. I'm trying to get my head around it. I was trying to pull up the data on Austin. It feels like Austin could just be flooded with housing units if these all come back, and they won't. Some of these will cash flow. But what's interesting, if you start digging into this, is average nights booked is 65. Average income is 10,687. Do you see a median price for the home in Austin?
No. Let me see if I can. I'm looking at for sales right now. There's 5,400 homes for sale in Austin. I don't know if it's total map that's the same or not, but pretty close. So median price for home in Austin. Median
Texas
price Austin.
450.
Okay.
Let's just even be generous and say it's 400,000.
Funny, Bing says 548. Median home price in Austin last month 548. So whatever, call it 500.
500. Okay, $6 per thousand, right? That's $3,500 a month if you financed it, roughly.
Okay.
And they're bringing in about $1,000 a month, average.
That's rough.
Okay, so if you're looking for a home to invest in, I would imagine you could probably find someone out of this 12,000 or 15,000. Because I just did entire homes and apartments. I narrowed it down. So I clicked on that and I got 12,400.
Got it. Yeah.
So out of 12,400, someone's only making an average $1,000 a month, but it's probably costing them, what did we say, 3,500 a month? But not to mention what insurance and taxes have done.
But I wonder though if this is net profit though. Does it say net profit? So what is that?
It's 221. Well, it takes 72 times 229.
Okay, so 72 times 229. That's 16,488.
So I wonder if they subtract out the basic booking fees.
So that could be okay, but let's look at that though. If they're taking in 16 grand, that house costs them more than 16 grand a year to operate. The average Airbnb owner then, based on this math, is losing money. Right? Because you just said if you finance, it's $3,500 a month. If it's a $500,000 house.
Yeah, if you financed 500, it'd be about 3,500.
Right. And taxes are high in Texas.
Probably
So-
$2,800, $6 per thousand. Rates are a little lower now.
So let's say it costs them even $2,500 a month. $2,500 a month is $30,000 a year.
Mm-hmm.
Right. So 30 grand a year. They got to be making more than that. So I don't know. I mean, we're going to have to dig in a little bit more into this inside Airbnb, try to get our heads around these numbers.
Yep.
Because this doesn't make sense. I don't know why you'd have 12,000 units if these guys are on average losing money, but maybe that's just a recent trend.
Okay. So now if I just click on activity, only recent and frequently booked. So let's say there's a lot of them out there, but they just occasionally rent them. It's not their business.
Yep.
Then we're down to 4,700.
Okay. So 4,700. Okay. That makes sense. All right. So now these guys are 28,000. So 183 times 164.
Yep.
3 times 164. That's 30,000.
Yep.
So depending what their monthly costs are, I guess.
That's average. There's some that are killing it, right?
Right.
If you got a great location, I'm sure there's people making a ton of money in this.
Right. Right.
But you got a lot of people with so-so houses and just not doing it very well. So that brings the average down.
Yep.
My point is out of that number, you're going to find some motivated sellers.
Yeah. Yeah, for sure. And this is a cool site, by the way. You know, to be able to
drill data here.
Drill down into this thing, it's pretty sweet.
What did we get here? Let's do this. Let's see if I can. I can't just jump over to that tab. Share. Here we go. Can you see that?
Yep.
Okay, so then we take the ID. So you can download this data from that website. So Bon Paul and Sharky's Hostel, and then host name is Bon Paul, neighborhood, latitude and longitude. Okay, so we'll copy that. And it's the entire home for rent. Price is $99. Minimum, I think that's person. Minimum nights. Number of reviews. Last review was June. And 3 reviews. Okay. So what I did here is I copied the latitude and longitude. So let me see if I can. This is what John and I do normally. We just nerd out on this stuff.
Are you going over to Google Maps?
I am. Okay, so then I just pasted that search in here. So I just did the latitude and longitude and then searched it. And then we get this red dot.
Why don't you right click it? See if you can right click it. See if it kicks up the address. Add your business. Nope. Okay.
What's here?
Oh, interesting.
816 Haywood.
Isn't that something?
Okay, so that's your address. Well, that can't be right. That's Asheville, North Carolina. Oh, it was Asheville. It wasn't Austin. Yeah. We downloaded the Asheville stats, so this is right. Yep.
Yeah. But if you zoom in on that. See if you can zoom in because I think the address does show up. You might have to be in satellite view, maybe.
Yeah. Layers. Oops.
There you go.
35. Nope. We did earlier.
It worked earlier. So 816 Haywood.
Yep, and there it is.
Haywood Road.
Here you are.
So the way that this can be, what I think this is interesting is if you're trying to market to Airbnb owners, I don't know, maybe there's a better way to get a list for them and things like that, but or if you're looking for a house, Bond, Paul, and Sharky's Hostel. Interesting. So I just Googled them. Cool.
Yeah, so they came right up in the search.
But Craig, go back to the spreadsheet. There was an interesting data point there that I don't think you and I talked about before. Let's say you want to try to buy one of these, right? If you go back and look at, I think you had days rented. It was tracking days rented. Okay, so go back over number of
reviews.
Was there anything else there? Days rented. Might just be able to do it by number of reviews.
Okay.
That if you were looking to try to say maybe somebody wants to get rid of this because they're just having a hard time, maybe you can search by
like here's two of them. One with 0 reviews, one with 3 reviews.
Right, a lack of reviews. Because I don't know that this shows
68 a night, minimum nights, 2 nights. Well, 509 reviews. Oh, availability. So this isn't even available. They just took it off.
Got it. I was trying to see if it had data on like how many nights was it rented. So it doesn't look like there might be other sites that have that. This one did not. Availability. I don't know what that means though. Availability 365.
I'm going to guess that's 365 days a year, and it's available 3 nights a year.
Right. This one's 332 nights a year.
Yeah.
198 nights a
So
year.
some are just kind of using it as offsetting some of their expenses. It's not really a business.
Right.
Like when I had the Florida place, it was, all right, I'll just generate some revenue for vacation home.
But I think there's something, if we spend more time with some of this data there, I think there may be some things we can pull out of it. Yeah, that's interesting to see how few are actually, like 300 nights a year.
Yeah.
That's amazing.
Okay, so Gone South Outfitters. I'm not sure. Can you read this comment? I put it on the screen.
Let me see. Oh, also other streams of revenue you aren't including VRBO plus maybe cash midterm deals. Yeah. Yeah, and Airbnb, I don't spend a lot of time on that site, but I know a lot of people that have midterm rentals and they advertise them on Airbnb.
What's a midterm rental?
Midterm might be something that's
3 months.
Yeah, maybe a month at a time.
Okay.
3 weeks to a few months. Somebody's in town or they're building a house. They just need something for a couple of months. They don't want to do a 1-year lease with you, and they don't want to pay by the night. They want a little bit of a discount.
The traveling nurses market that I hear.
Traveling nurses market is big. I just studied one in Augusta, Georgia. That was exactly what it was used for.
Really?
Yep. Midterm rental, advertised on Airbnb, filled up with traveling nurses who get assignments. Yep.
I've got one over by North Memorial. Should I turn that into like traveling nurses?
It's probably not a bad, but the issue though is, right, you just now you got to manage it, right? Now you're turning it over.
I got good renters in there now. I don't want
to. It's for the little boost in income you might get off of it. I don't know if that's going to be worth it for you.
Yeah.
Yeah, so that was a fun site that you brought up, and then we started digging around in this data. I think there's something there. From my standpoint, just on cost segregation, we study Airbnbs all the time. Mm-hmm. Craig, I was telling you, I've got a client that's making $50,000 this year as a first-year Airbnb on a tiny little house. They spent maybe $275,000 on it, but it's in a nice area, decent area. I should say decent area, and they're killing it. But they're working their tails off. They really are.
They're running a business.
They're running a business. They are running a business.
It's not passive income.
Nope.
Although what I'm doing is not passive income either.
No. In fact, I saw somebody had posted something. Hey, can we stop talking about real estate investment being passive income? There's nothing passive about it, unless you're investing in a REIT, right? Or you're truly a limited partner in some deal. But if you're managing it, you're active. You are active.
All right. Did we cover all our bases today?
I think we did. Yeah, I think we did. Awesome. How are we doing on timing? Well, we're almost an hour in. So
yeah,
this is great.
I'll do one more quick little thing here. Maybe. Share screen. What tab am I on? I got 1,000 tabs open.
Yeah, me too. My kids just laugh.
There we go. Okay, so this is just the weekly market update. This is last week. Okay. So we talked about the cyclical nature of the housing market here.
Yeah.
So this is inventory peaks in the spring and summer, and then it comes down, right?
Yeah.
So now the doomers online are saying, oh my gosh, listings are dropping, right?
Yeah.
Or inventory is going up is what they're saying. But we're kind of hitting that peak, and then inventory is going to drop down, right? People are going to pull it off for the winter months, for the holidays.
Yeah.
Yeah, we're 8,330 listings for the Twin Cities. We should be, I would say, right around 15,000 to be healthy.
Oh, at least.
So we're half of what we need to be.
Yeah.
Yeah, that doesn't even account for growth in population. So we should probably be closer to the 20.
Yeah, you got 3.5–4 million people there, and you only have 8,000 listings for sale.
Yeah, prices are not coming down.
Yeah, that's going to be tough. That's going to be tough. But it does have the appearance that it has finally bottomed. You know, we've been calling for the bottom in housing inventory for years. I mean, I remember looking at this chart going, oh yeah, it bottomed in 2013 or 14. Nope, just kept going down.
In a 3-month supply of homes, and I'm like, you can't build a house in 3 months.
Right.
Yeah, right. Median sales price keeps going up. We're up 3% year over year.
So it's slowing. You can see the trajectory. It's flattening a little bit at the top.
Yeah, here's a little indication. 98.7 list price received. So we're not quite getting full price offers on average. Housing affordability is starting to come back up as rates lower.
What you don't have, and what I remember, you know, in reading all the doomers online, month supply, okay, still low, so but climbing, starting to go up, and that's good though. The market needs to come up. People saying, you know, prices are crashing and stuff like that. I remember the prices crashing in 2008. I had a listing in Orono. It was a stunning listing.
For those of you who don't remember 2008, that's right about here at the peak.
Yeah. So it was incredible. So go back to price. Go back up to one on price. Let's see if you can see 08 there. If we can see anything. Ledger price received, median sales price, days on market,
inventory.
So kind of probably tough to see on these. Tough to see on these, but prices were literally crashing. Like it was a daily occurrence. And I just remember I had a beautiful listing in Orono. We just couldn't believe it. It was like, I think we were listed like 1.1 million. We had so many people through, tons of showings, lots of broker opens, and agent after agent like, look, I don't know. I can't tell you the price anymore. I don't have any idea what this thing's worth. No one could figure it out. I eventually got fired, right? Because I couldn't sell it. Prices kept going down. I kept trying to tell the seller, look, this is like a jetliner going into the ground, and it's going down by the day.
You can't get ahead of it. You couldn't
accelerating. You can't get ahead of it. You could take $100,000 price cut, and you're not in front of it. And so that was the whole thing. You had to try to tell sellers, look, you got to get in front. So you got to leapfrog the price today. If you think your house is worth $900, no one's going to pay $900, even though we started at 1.1. You got to go to like $850 or $8, so that you can try to catch them as they're going downhill. They might run into your house.
Yep.
But if you price it then at the market today in a rapidly declining market, you're behind the 8 ball instantly.
Yep. Yeah, and you could not cut to catch up because someone was undercutting you and dumping theirs before.
Yep. And, that's the hard thing as an agent, right? You try to do a good professional job. You've got data, you show them, you've got anecdotal information, you got all this information, but sellers don't want to hear that. They just think they need a better agent so that you get fired. And
well, especially when they owed 1.2 million on it, and you're telling them you got to sell it for 800.
Right. And I think the thing sold. I think it sold maybe, was it low 8s or mid 7s? I don't know. It was a 30 to 35% discount from where it should have been, but that was the market. It fell. It crashed. That was a crash.
That was a crash.
Yeah, that was a crash. This is not a crash. Not yet. Might happen. I don't know. Could be some kind of event. We could wake up. World War III could be certainly launched. It could become,
World War III could trigger something.
Yeah.
But everything else we have out there is not going to trigger price
and
crash.
some say we're already in World War III, but I'm talking about, if bombs really start flying on, Western nations kind of thing. We're not there yet. Hopefully cooler heads prevail and we work our way out of this. That's my sense. We work our way out of this. So
we got to do some counseling here. Gone South Outfitters just subscribed. I'm also getting out of construction and currently getting my realtor's license.
Oh, that's awesome. Welcome to the party.
Run.
Actually, you'll have that's a good background in the construction business, and that'll be good for you.
Yeah. The realtor business is not an easy business.
No.
It sounds easy, like all we do is open doors, and no, it's a lot of work. And
that's why we're kind of out of it.
Yeah, so we find different avenues.
Yeah.
So keep your construction skills, and that's what I've utilized. My background was construction, and then use that for investing. Like you just built that clubhouse, built that RV park. Capitalize on that. Use advantage of your real estate license for your investing.
Yeah.
But going into being a realtor right now with the market the way it is, it's going to be a tough run.
Yeah, I think so. But good for him. That's great.
Yep.
That's cool.
No, it's great to have a real estate license. But,
super cool.
Keep the construction on the side.
Well, yeah, like the real estate, I don't ever really envision getting rid of my real estate license, even if I don't really do any more deals.
Yeah.
It's nice to have. Gets you access to some sites that most people don't have access to. Got to pay for it. Got to do CE, but whatever. It's not that big of a deal. I
mean, I still do deals. It's not my full-time gig, right? It's I did 30 years of it.
Yeah.
So it's just kind of I still have that desire for construction. So
yeah. Yes,
well, good.
Sir. Awesome.
Thanks for jumping on again this week. And where do people find you at?
I've got a YouTube channel, John Murphy SC. Find me on Twitter at CostSeg Building, and I run a blog at costSegBuilding.com. Lots of information there.
Excellent.
And hit me up on LinkedIn. Craig, you're not big on LinkedIn, but a lot of stuff going on in real estate.
What's my password?
Yeah, get that figured out, would you? There's a lot going on.
They make me change my password all the time, and I don't remember. I don't know.
You just got to do it once, start using it, and then it'll feel good about it. There's just a lot going on LinkedIn.
Okay, so, I'll get on there this week.
All right,
and then you'll have to show me the ropes there.
Sounds good. All right, Craig.
Have a good week.
All right, sounds good.
Check in later. Thanks.
All right, bye-bye.
Bye.